Hey everybody, welcome to the Coffee and Confidence, the last Friday of the month. I'm drinking a nice little Starbucks holiday blend because I bought a ton of it when it was on sale at Costco. Let me share my screen here and we'll jump right into it. All right. So, for those of you that don't know me, I am Kevin Clark. The CEO and the co-founder of Planned Confidence Corporation. I'm also known as the ERISA Nerd. So if you've ever read any of my blogs on ERISANerd.com, and I used to be an advisor just like you at the practice outside of Chicago, and that's how I got swept into this whole held away assets and all that back in 2008 when the markets were going straight down and my clients were begging for help on how to manage their 401k assets. And with the broker dealer affiliation back then, I had to be really good at what I was doing in order to get it approved. But let's jump into it. We're going to cover a lot in 20 minutes or so and take about 10 minutes of questions. First, obviously, disclosures, no tax, legal, financial advice, all that kind of stuff. Also, this is for investment advisor representatives, those with a Series 65 that could legally provide advice. So if you're an FINRA rep or an insurance agent or so, I can save you some time because you can't legally provide advice. So you could save a half hour of your time. And I want to ensure if you're an independent advisor that your firm also allows you to provide 401k advice. So a lot of firms, especially if you're at a large broker dealer or one of the insurance broker dealers or LPL or something like that, they will not allow you to put anything in writing in regards to your client's 401ks. And there's very legal reasons for that. They're very large institutions. It's very hard to supervise 10, 20,000 advisors, out in the field. So just because everything we're talking about today is legal under the law, please double check with your firm to make sure you can provide that. And then just to remind you too, at any point in time, feel free to use the questions box to ask a question. I saw several questions actually come in when you guys signed up, so we're going to cover those as well in the amount of time that we have. And then also we'll do a drawing for the $25 Starbucks gift card at the very end before we do questions. So today, on today's Coffees with Confidence, this is what we're going to cover, specifically how Planned Confidence, our company, can actually help you scale, literally the advice creation and ERISA compliance. Also getting paid, which is very important to many advisors. I know it was for me when I was an advisor. And then also how easily advice implementation could be, because we create all the advice and, due diligence and all that stuff. And we'll cover trading at the end, which has been a little controversial over the past year or so. So first and foremost, how do we scale? How can we scale what takes you a lot of time? So if you've ever tried to work with someone's plan before, you'd have to get the fund lineup, go research and Morningstar, overlay asset allocation models, document everything, keep that documentation for 6 years. You also just open yourself up to lawsuits because there is no mandatory arbitration anymore. That's why the big firms won't do it. So let's talk about, really working with Planned Confidence. You can work with any plan, any size. Doesn't matter if your client's just getting started. It doesn't matter if they work for a large, institution or even the federal government, the largest defined contribution plan that's out there. Anything that has a fund lineup could go into our system. We actually have advisors that are using us with health savings accounts and variable annuities, and things like that. So if there's a fund lineup, it could go into our system and we could create advice specific for your client, specific to the investment options they have. Also, asset allocation strategies. You could use your own advice. So if you're running your own models, if you're managing your client money, you could easily duplicate what you're doing in your client's accounts within our software, which is really cool because we have the only platform that allows you to plug in your advice and spit out advice specific to each one of your clients, their preferences, let's be aggressive, not put money in emerging markets, whatever. specific to their investment options within their plan. We score everything. We pull in 15 pieces of data from Morningstar. We actually score every single fund. Once you go down the path and you start working with your clients' held away accounts, you have to, by law, continuously monitor them. So every quarter we're rescoring, we're reviewing all of those plans. If you are not researching in Morningstar every time you advise your client, you could be on the hook for all your clients' losses or any type of missed gains or so, because now if it's a 401k and you check the boxes in ERISA fiduciary, you have to do what the Department of Labor tells you. So the ERISA compliance, we've got everything built into our software. So even if you don't know all the little ERISA rules, you can't run afoul of them, with our software. We literally have an algorithm that's going to lay, your advice, your specific asset strategies over all the available investment options your client has, to obviously make sure everything totals up to 100%. And we'll even tell your client when we can't diversify them the way that you wanted them to. So let's say you want a 10% high yield bond and your client doesn't have a high yield bond, they're going to get a little asterisk and let them know, hey, you have too much money in PIMCO total return now and not enough in a high yield, which you could then use to manage their other assets, IRA, discretionary, or non-brokerage accounts, things of that nature, and everything that we do in the background. So when I was doing this as an advisor, it would take me about 15, 20 minutes to do all of this process manually for each and every one of my clients. So if I had clients at the same company, it was great because, the plan and all that was already in there and the research was done. I could quickly, scale that with those clients in the same company. But when you start dealing with different companies, husband and a wife that work at different firms, it gets very, very time consuming when you start realizing it takes, 15, 20 minutes for, each time you want to do quarterly rebalancing or something like that. Our software literally does everything for you in about 10 seconds, 15 seconds, once everything is properly set up in our database. And let's talk about compliance real quick. I literally could do a 1-hour webinar, and I have in the past, on ERISA compliance. Let's just cover the quick highlights, what you have to have before you even start this. You have to have a prudent written process. Now, I've talked to thousands of advisors. We work with hundreds of advisors. None of them had a written prudent process before they started. A lot of them didn't even realize that they needed it. And your ADV or your IPS, that doesn't count as your written prudent process. Once you have your written prudent process, you have to follow it each and every time you either trade the client accounts or tell them how to manage their money, this and that. And you have to prove that you followed the process that you wrote and disclosed to your client before you started working with these assets, which means you have to have documentation. And that's really what takes the most time, is the documentation. It'd be really easy just to look at a client statement and go, hey, put 10% here, 20% there, there's that. But it's definitely not compliant with ERISA. And you're definitely going to be responsible for any missed gains or losses if a lawyer ever found out that's what you were doing. So you got to make sure that you have the process, you follow it, and then you document it. Then a couple other bells and whistles. Diversification. You have to diversify your clients' assets within their 401k plans. I talk to advisors all the time, say, well, we buy all the bonds and the 401k and all the stocks and their non-qualified accounts. It's better for them tax-wise and so on and so forth. That's great. But if a lawyer finds out, you're going to lose your house, because there is no corporate protection when you deal with this. Everything is personal assets. So if your E&O insurance isn't enough to cover it, they go directly after your personal assets. So make sure you're always offering diversification to comply with ERISA. The last one I've never seen a problem with is ERISA allows you to charge a fee for your service, but they have to be, and I'm doing the quotes here, reasonable in light of services rendered. So you want to make sure that, at least at a very, very high level, that you're checking all of these boxes every single time you tell your client to either rebalance their accounts, or if you're trading the accounts for them, that you do all that before you trade them. If you don't, and you get caught either by the Department of Labor or by a aggressive lawyer, you literally have to pay back all your client losses. They don't have to prove damages in an ERISA case. They just have to prove you violated your ERISA fiduciary duty. And the ERISA fiduciary duty is way higher than your duty under the Investment Advisor Act. This is why the largest firms don't touch it. They can't supervise 20,000 advisors out in the field. And if one advisor screws up, a bad lawyer, hell, even a good lawyer, a bad lawyer, a medium lawyer, they're going to turn this into a class action lawsuit, which they have the ability to do under ERISA, and they're going to start looking into the practices of the other 19,999 advisors. So the largest firms are out there like, whoa, we tell everyone don't put anything in writing when it comes to those 401k accounts because they don't want to go down that zealous lawyer who's looking for a big payday. Now, we got all the ERISA compliance built in. Again, you can't run afoul of it even if you don't know the rules. This is why larger firms are actually starting to look into us right now. They love the fact that we have the ERISA compliance built in, so their 20,000 advisors couldn't run afoul of them if they tried. And a lot of smaller firms are looking into us because of the speed of which we could do everything, the research, the advice creation, and all that, and get your advice to your clients. We have advisors running tactical models through our system where they're like, oh, shoosh, you know what? The markets, they're going crazy today. This week it's been up and down. They might go, hey, you know what? We don't like what's going into March. We want our clients all in cash or half cash or whatever. We'll tell them when to get back in. They literally could push a button with our software and new advice will be ready for all of their clients at 9 a.m. Eastern time tomorrow. Well, Monday, the next trading day. So in terms of doing the research, the advice creation, documentation, delivery advice, we've got all of that down to a science. Now, the way we deliver the advice, we have advisors that use us two ways. One is to speed up their non-discretionary investment advice. Mr. and Mrs. Client, this is what you need to make your account look like. At the end of the day, Mr. and Mrs. Client, you're going to have to log into Fidelity, Vanguard, whatever, and trade the accounts yourself. And the way that we deliver the advice for that is what we call through a participant dashboard. Now, we've got two different dashboards we're going to quickly cover today, the advisor dashboard and the participant dashboard. So with the participant dashboard, what I want you to realize is we're going to brand you. This is how we deliver the advice. This is what we call the participant dashboard. We white label this for you. So whatever your color schemes and, oh, that's bright blue. However your color schemes are, what your logo is, all that good stuff, that's what gets displayed to your clients. We're going to brand you. We're going to make sure that your clients are thinking of you when they think of these 401k assets and they stop thinking of Empower or Fidelity or whatever. So if you ever get a call from a client saying, hey, I'm thinking of switching jobs, am I fully vested or so? You've done your job absolutely right. Now, for those that are delivering non-discretionary advice, the clients will get an email at 9 o'clock Eastern time saying, you need to log in to the participant dashboard, click here, your advisor uploaded new advice, and then this is what they see. Our software has the ability to separate advice for future contributions versus rebalance instructions. So if you are one of those tactical managers, and let's say come Monday, you want everyone to go to cash because let's say the markets start to fall and they're falling good, you probably don't want their next paycheck, money going into the plan, going into cash. You probably want them taking advantage of the market falling. And in that case, then you could say, hey, we want all those future contributions, buying small cap stocks, buying emerging markets, the S&P 500, whatever you want. Our software could separate the advice between money going into the plan with each paycheck, i.e. a future contribution, versus the rebalance instructions, which is, okay, now we need to move the money internally within the plan. So it's optional. You don't have to. If you're running strategic allocations, you're probably better off not having your clients even see future contributions and just giving them the rebalance instructions at any point in time that you think they need to be making changes. Now, one of the things that I mentioned is every time you tell your client what to do with their money, you have to do the research, you have to document it, you have to overlay those asset allocation strategies, all that good stuff. So if that client, let's say right now, what do we have this one in? This one is in a growth strategic portfolio. Maybe they wanted to move to 100% equity. So again, if they did that and called you, you'd have to go through that process of looking through all their available investment options, researching them in Morningstar, overlaying 100% equity model, getting the advice, delivering the advice to the client via either email, calling them, mailing it to them, however you're delivering the advice now. Here, your client just has to click change profile. In this case, go to 100% equity, come down and hit submit. The next screen pops up is your participant, we call them your client. They could customize the advice. So if they want to be in 100% equity but not put that money in emerging markets, they literally just deselect the emerging markets category. You know, if they don't want to put money in small caps, you know, they can deselect the small caps category. Then they click submit. And then instantaneously, your client is going to get new advice on exactly how they should be managing their money. In the background, when your clients are changing their models and they're hitting submit, we've done the research, we've done the documentation, you know, we've done everything that's required of you. It's not that 15, 20-minute time frame anymore, and your client did it on their own. You as the advisor would receive an email right now saying, hey, John Doe just changed their account from growth strategic to 100% equity strategic. You know, we're going to keep you in the loop in regards to what's going on with your client accounts. So this is how we deliver non-discretionary advice. We've also built in to the advisor dashboard, which is what you see here, this little button that says launch trade files. So you have the ability to turn off the participant dashboards. And let's say you're using, you know, Pantera or Future Capital to place all your trades. We have a lot of advisors that are using us for the research, the advice creation, you know, documentation, risk and compliance, you know, for them to get paid, so on and so forth. And then they're placing the trades themselves. We added this feature here that says launch trade files. So let's say you got, you know, 30 clients in the system on Pantera or whatnot. You literally just receive 30 different emails, one for each client. You don't even have to go in to our system. You just have to open the email. It's going to come out with, you know, the little asset allocation for each one of your clients. So then you just have to open Pantera and make the account look exactly like it is from our system. So a wonderful way to have the advice creation, you know, the documentation all the way through the implementation with a massive paper trail. So eventually when you get audited by the SEC, which we have several firms going through audits right now, and the SEC is very interested in those that are using Pantera. And I know it because we're getting questions from our advisors from the SEC to provide them the backup documentation in regards to all the advice creation and what's going on through Pantera and stuff. So we know it's there. The other thing I want to show you from the advisor dashboard is how quickly it is to set something up in our plan, in our database. All we need is the fund lineup from your client. And the easiest way to get that, have them log into, you know, their Fidelity, Vanguard, whatever, click on the investment performance tab. Every single browser has the ability to use their print function and change the printer to save as PDF. So if you're on the investment performance page, you change that as save as PDF, you will have all of the available investment options. That's all we need to get started in our system. You click add account. The first thing you're going to do is, are you doing future contributions or just current allocations? You know, do you want them to receive both or just, you know, rebalance instructions? So let's say we're doing this one for rebalance. You could take a look to see if the plan already exists in our database. So in this case, if you have a manager at AT&T, you know they're in the RSP plan, all you have to do is click AT&T RSP management. If you're using our billing system, the first drop down on here would be you set your price that you negotiated between you and your client. $50 a month, $500 a month, $1,000, $25, you know, whatever it is, you drop that down. And then this is all the information we need: name, address, phone number, date of birth, email address. If we don't have the plan in here, you're looking for it, oh, I don't see it, all you have to do is hit submit new plan, type in the employer name, and then upload the PDF that you just did, hit save, and then the next screen that pops up is that participant information screen. Even if you type with 2 fingers, it's going to take you less than a minute to get anything set up within our dashboards. Let's go back to the thing here. All right, so quickly, getting paid. Most advisors we work with want to get paid for their services. You could bill another account as long as it's a non-qualified account. You cannot bill an IRA for services that are being provided to a 401k. It's against the law. If the IRS finds out, not only will there'll be a 15% excise tax on you and your client, they're going to blow up the IRA worst case scenario. So if your client had $1 million in the IRA, all of that becomes taxable. If they're under 59.5, it's another 10% penalty. It's a good way to see yourself in arbitration. You don't want to do that. So only bill non-qualified accounts. This is my least favorite option. I don't think you should be billing non-qualified accounts unless you set up just a billing account that has money flowing into it and flowing out. Because if you get it audited by the SEC and you're pulling out 4, 5, 6, 7%, in fees from that account, they're going to have questions. It also screws up your performance per reporting. We have integrated billing. We built in with Stripe. Stripe is the only third-party money processor that works with investment advisors. So we literally have your client can put in a credit card, debit card, Apple Pay, ACH, whatever it is. So you set your fee, we collect it. Stripe charges 2.9% and 30 cents a transaction. Whatever Stripe pays us, we pay you. We don't upcharge. We don't we don't try to make any money off of it. We literally built the integration because advisors were asking us for a way to get paid. Around the same time we launched ours, Michael Kitces came out with Advice Pay, which was also built on the back end of Stripe. Ours is just straight monthly billing. Advice Pay is way more robust. If you're familiar with Advice Pay or you're using it now, you don't need our billing. You already have a system in place. If you don't know about Advice Pay, you can take a look at them. They have a way where you could charge one-time fees plus recurring, quarterly, monthly, however you want to do it. Ours is just straight monthly. I know InvestNet has a BillFin or something like that as well. I'm not that familiar with that, but there are ways to make sure you get paid. Unfortunately, we cannot fee the assets of the plan unless you're the plan advisor. Then you could fee the assets under either your standard agreement or a separate agreement. So trading. Your client can do the trading. We make it real easy. We even hard code, the Fidelity Net benefits or the MyEmpower, wherever they need to go to if you're providing non-discretionary advice. You can use Pantera or Future Capital. They're third-party fintech. They have the ability essentially to capture your client's username and password and then finagle the two-factor authentication to have the ability to place trades. You get a dashboard through Pantera Future Capital. You don't have direct access to the custodian. So you're not taking SEC custody when you're using these third party. Now, if you're state registered, I know there's 5 states out there, Washington, Missouri, I think New England, Ohio, and Colorado. They said no. If you're state registered, you can't. If you're SEC registered, you can. I am aware that Fidelity is blocking Pantera right now under cybersecurity concerns. We all know it's really anti-competitive behavior, but there is a solution for that as well too if that's running up against a roadblock. And then finally, last but least, we don't even advertise this on our website right now, but we can operate essentially as a TAMP for you, a one-stop shop. We use a combination of Pantera, Future Capital, and we have the ability to phone in orders to Fidelity if your accounts are at Fidelity. So if you want a fully outsourced platform, we could do it for you. Just like Pantera and Future Capital, we charge 30 basis points. However, we've got a minimum of $8 a month. They don't have a minimum, but we also have a maximum of only $99 a month. So if you have $1 million plan, it's not going to cost you, $3,000 a year to trade it. It's going to cost you $1,200 a year for us to trade it. So there are ways to do that. And with that, I noticed I'm like 4 minutes over time, so I'll stay a little bit later if anyone has questions. But I do want to do a quick drawing. If you can all see, I've got a little ping pong balls with numbers from 1 to 100 for the first 100 people that signed up. So we're going to do a gift card drawing for $25. In the meantime, while I'm pulling this and seeing number 35 on here, which correlates to the numbers of when you signed up. So Jason Hadelman, you won a $25 gift card. I don't know if you're on it right now or not. You don't have to be on it in order to get the card. We'll email you your gift card later. And before I forget, next month's topic, we're going to talk about you as the advisor versus ChatGPT giving your clients 401k advice and why it's actually a ticking time bomb for AI. So be sure to look for the email for next month's Coffee and Confidence too, as we cover that, and tell all your friends to tune in as well. Now, I'm going to open the questions box. I saw some come through, and we had some when you guys originally signed up. If you have questions, Kevin@plantconfidence.com. You're also going to get a recording that after, shortly after this, or Monday or tomorrow. I forget what. Depends how long it takes to convert to a video. You can also reply to that as well. Don't be shy in regards to asking a question, either via the questions box or Kevin@plantconfidence.com. So a couple that came in so far. I've been calling my clients every 6 months, telling them how to rebalance their accounts. So that's something I could automate with Plant Confidence. 100%. Yeah. I mean, you'd have to kind of retrain your clients where you're not going to call, but it's going to come through the dashboard, where they could log in, they could see their advice. There's even a button in there. If they have questions, they click it, you get an instant email telling your clients actually in there, looking at everything. We have a hyperlink back to their account, so you could look at it with them. But 100%, we could do it for you and automate that. That's the beauty is whether you have one client or 1,000 clients in with us, once you push that button saying, hey, tomorrow at 9 a.m. Eastern time, they all get that advice at the same time. They all log into their dashboards whenever they have time to do it. I thought it was illegal to trade my clients' 401k accounts. The answer is no, it's never been. I'm going to assume that you probably came from a large broker dealer like Edward Jones or Merrill Lynch or something, where it's kind of drilled into your head that if you can't do it at Mother Merrill, then it's got to be illegal. 100%. ERISA came out in 1974. It's always been legal to do it. The SEC even says you could have your clients' username and passwords. You have to follow the custody rule, with the surprise audit and ADV Part E, I think it's called, and all sorts of stuff and disclosures to your clients. But 100%, you could definitely trade your clients' 401k accounts. You don't have to have custody over them. Let's take one that came in. Current guidelines, issues, FINRA compliance, problems for moving 401ks to IRAs after retirement. So it's less of a FINRA issue as it is an SEC Reg BI, which then supersedes ERISA, as well as the DOL, what's called PTE 2020-02. If you become an ERISA fiduciary to your client's accounts by using our system, by trading the accounts, if you trade your client accounts at discretion, you're automatically. If you're advising for a fee, you become an ERISA fiduciary. All that means is you now need to use PT 2020-02 form when you're rolling it over. And there's some very specific stuff, and Reg BI actually is very similar. They kind of copied, the SEC copied the Department of Labor copied the SEC's Reg BI rules on this. When you're doing a rollover, you're supposed to do it almost like a T-chart comparison. Here's the services in the 401k. Here's what you're going to get in the IRA. Here's the fees in the 401k. Here's what they are in the IRA, so on and so forth. You need to have all that done. Now, the Reg BI rules are very similar to the DOL rules, so you're going to have to essentially do it anyway. But the general rule is if you are making more money, if there's anything that you do in terms of your duties as an ERISA fiduciary, which is going to cause you to make more money, then you have to do the PT 2020-02. So let's say you're charging 1% for advice and your client's trading them, so whatever, and then it's going to go to an IRA and you're still going to charge 1%, but now you can do the trading and all that. Then technically you don't need PT 2020-02 because you're not making any more money. But if you're, let's say, charging 50 basis points or you're doing a flat fee of $100 a month or something, and then it moves to an IRA, you're charging a 1% fee and it's going to be more than $100 a month, then you would definitely need the PT 2020-02 rules. Again, I would check with your compliance department on that because there are specific things that need to be done, including an annual retrospective review and all that, which needs to be done before the end of June. Let's see here. How long do you think we have before big firms start offering this as a service? I don't have any firsthand knowledge. I will say we are getting looked at by several large firms. The large firms take a long time because not only do you have to jump through all the compliance hurdles, it's got to go through like the IT departments, it has to go through the sales department, all this stuff. Normally they do a small rollout with just some selected advisors before they decide if they're going to roll it out. So I would say you still have, in my best professional opinion on that would be 2 to 3 years at the earliest, possibly longer, because a lot of them just aren't going to want to have that ERISA compliance, hammer laying over their head if they got 20,000 advisors, and one of them, screws it up. All right, one last question. If there's any that came in after this, I will personally email back to you the questions. But does your system work with 403B accounts as well? Yeah, and I should have been specific. Anything with that fund lineup, the 401k, 403B, we have the TSP already in here, even though it only has 5 options. If you have a client like a SEP IRA, we help advisors create their own fund lineup and stuff. But we work with anything with a fund lineup. We could overlay your asset allocation strategies. If you don't have your own, we have ones pre-built into here. We get the models from BlackRock and overlay it. If you don't want to use ours, we have 5 strategic, 4 semi-tactical. You could also program our software with your own. So that's all that I have. I went 3 minutes over time. I apologize. If you have any questions I didn't cover, again, Kevin@planconfidence.com. Look for the email coming in the next day or so too. That'll have the recording of this as well as some other fun information. But please let me know if I can be of any help or any service. We're rocking and rolling here at Plan Confidence because we literally want to brand you and make your life as easy as possible when you're working with these held away assets. If we can help you, let us know. And be sure to sign up for next month when we talk about ChatGPT, which is now giving wink, wink, non-advice advice to your clients. With that, congratulations to Jason Hadelman. And I ended, as I always say, and I wish you guys continued success and peace.